The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon until 1 p.m. Very interesting session. We just squeaked to a new all-time high in at least the Dow and the S&P. I haven't gone through some of the other indices that I wasn't notating. So let's look at this. The E-mini is up 20.75. I just wanted to show you something here since it's Technical Friday, where we do a little bit more based on the Chapman wave methodology. Remember last Friday I spent an all-day session with attendees, and we were going through the Chapman wave methodology. A lot of it based on my books, the CD Introducing the Chapman wave methodology. So you see this E-mini, this is the March contract. From this low that was made around, let's call it about 10 o'clock on the 10th of December, you start moving higher. That wasn't the beginning of the move. That move started with an instant restart in the Chapman wave, where at a peak D within a certain number of bars, if you break to a new high without then retesting the lows, that's very positive, and you can actually start a new buy mode to another peak A, B, C, D, because we're always looking for 4 higher peaks alphabetized with uppercase on the way up, lowercase on the way down. So what happens is it screams up to 2673 at a peak D. The MACD was not confirming that rally. It made that little, what I call the arch formation, a little H, lowercase h breakdown. The term I use here is a deflected lower. Inflection for me implies breaks through. Deflection means it cannot, and it goes back to the trend that it was in initially. And this means that it started to break down, tried to rally, failed, and we continued breaking down. In this particular instance, if you look at that 8 o'clock time frame on the 11th of December at 26:57.25, the MACD deflected back up again. Goes back into the trend that it was in. Stochastic didn't break 80%, touched it, and then went up. So what happened is you got a cup formation going down from 2673 to 2659, then right back to 2657.50 peak E. That started another H formation, a rectangle formation that failed. Market started to really take on water and went all the way down to 2651.75. That's a 24-point move. That's big. Well, it's just made more than a 24-point move on the upside. It just went to a high of 78.25, a new all-time high. Now, this is the reason why I want to bring it up on Technical Friday in the Chapman wave methodology. The big question is this brand new leg A, or is it an emotional response, perhaps to the tax bill, that really triggered this move up? And as a result, you've started a brand new move, at least in the 120-minute chart. You had an arch formation testing the left side low of 2652.25. Gosh, I don't know why that happens. And that became the move to the upside in an arch formation, with a 2659 being the fulcrum to the downside. That's the pivot point, or what I call the, look right here, is where you get that vertical line, the plumb line. And now we move to the right, and it takes 2 bars extra before it breaks that support that was at 2652.25. And then it starts to move to the upside. So because this initial peak A, which starts from right here, 2649.25, wasn't broken, this could turn out to be a peak F. If there's just sudden bad news, maybe the bill, there's someone who can't vote, whatever it is, and it starts to come down. At this particular point, the MACD and stochastic are rising very nicely. And all you can say is that 2675, the previous high, was taken out. 2673 will be your first next support level near term. But basically, as long as this holds going into Monday, let's say Monday this time above 2671, 2666, as long as it's above that, you've got to consider that this is an active leg A. I wanted to go through that because it's really important for a number of reasons. And now I'll start to explain why. Whoops. I'm going to go through this right here, get out of that 120. Now this is the new contract, the March contract. And now we can go. So, yes, 2 days ago, 2675.50 was the high. Yesterday, no new high. Today, new high, all within. You see this trend line? I love it. This is what we spent time on last Friday, looking at trend lines. Look how important that trend line is. And so far, price stopped dead. All right, let's look at the Dow, INDU. The Dow is up 100, 149. Spectacular move, really. It's taken out the really weak candle of yesterday, made a slightly new high, also got a little trend line resistance there, but this remains leg E, the daily, leg D in the weekly, leg E in the monthly, and if we look at the, let me get out of that. If we look at the MACD is very strong. The stochastics at 91% in the MAC, and the on-balance volume, the blue line, all very good. There's nothing negative here, but the 120-minute chart, if I can just go here for a moment, 120-minute chart did squeak to a new high. It's made a kind of a V-shaped pattern in the Dow. Look, the MACD hasn't crossed positive. This could still deflect lower by the end of the day. And the stochastic, yes, it turned up, but it's only at 69%. So price is actually leading the technicals. That's an unusual situation. Both of these are 120-minute charts, and the technicals in a greater detail. What we're looking at is this arch that goes to an M-shaped formation, a rising M formation, strong MACD. The stochastic is good at 91%. It's starting to flatten, which is a hint to say internally there's a little bit of weakness. On-balance volume did not make a new high. A couple of discrepancies, but as long as this pink line right here, the 7 EMA, remains above, so far that's really good strength. So we did go short. So we were within, well within the boundaries that I expected in terms of the covering the short positions, just a trading position. I had every reason to, because this 120-minute chart actually went to a sell mode in the Chapman wave because it closed twice underneath the 9-period moving average after a peak F, and the stochastic and MACD were turning down. What I did say is that the MACD had only started expanding, so we're going to have to watch that very closely. This could be a right arm extension failure or a rogue wave even. We'll see by not just the day's end, by Monday. Got to go Sunday night into Monday. You don't even have to go to this time. Monday, 10:30, you should know a chunk about what's going on in the tax bill, etc. So now let's go to the S&P. I'm about to run out of time. I don't want to. S&P right now, all-time high. This one is not a fractional new high. It's actually quite, look, you went to 2671.88. And today the high so far is 2675.43. If it closes underneath the high of 2 days ago, that'll be a negative. Right now it's looking quite good, and the MACD and stochastic and the daily are very strong, as with the monthly. I'll get back. We'll talk about gold. We'll talk about the dollar. We'll talk about silver. We'll talk about crude oil. We'll talk about bonds. And then what we will do is we'll look at questions I had, and we'll go through those as well.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So let's just continue with this. We're looking at the Qs. Breakout. It looked really, the Qs at 152. The MACD was poor. The stochastic was poor. This is a tremendous single leg A characteristic to the upside, breaking to a new high. Look at this in the QQQ series. There you are. Look, the MACD, very, very poor. And now you made this big wide bend with a positive crossover to the new high. But the original peak A was right there at 146.33. Trough A, that is. So that says that this could be an alternate count E to a brand new A. And we won't really know. It's a very good move to go to the 84% level in the stochastic and have the MACD just now cross positive. I'm thinking if this is an A and we're only at the 15th of the month, we could have a leg D going all the way into the last few days of December. So I'm going to be watching this. To tell you the truth, right now, I'm more agnostic. All our positions are long positions, and we even added to the long positions. But at the same time, there are stocks that are beginning to look really toppy. So how we put the panoply of all these different aspects together, it's like a game of chess. This is a good breakout. I'm not going to deny it. It is leg D in the weekly, but the technicals are still pretty strong. So it has to be bad news that's going to bring this market down. Otherwise, probably using a quote here, the path of least resistance is it's moving quite nicely. So, yeah, the question is, I mentioned that just a moment ago. I said that we had a short-term short on the Dow, the Dow inverse of the diamonds, mostly based on the 120-minute chart. But I had said that if there is a move to the downside that goes minus 45 or more in the Dow after a certain time, we want to start a short position. And that was absolutely correct based on the technicals of the 120-minute chart. The daily was still in leg E. So we can cover because we got in reasonably well. So, yep, it'll be as a very small loss. If we take a loss, let me just double check here. 99. I can't even remember. I know I raised the stop a lot. So a real tight stop. Let me go through this. Yeah, it's a very tight stop. So it's something we can handle. You know, that's the only way you can do it. You want to stay in the game. So let me just go on. IWM. So we still have that core. Some subscribers still have that core position from the 22,290s, and that's an intermediate term position. I hope not to have to change that at all. IWM, nice candle today, up 208 at 1.39% and 152.19. This is kind of important because there's a missing leg D, and if that goes with the QQQs, there's a chance that, in fact, you remember a market that stays high through the September-October period, and in October, November starts to move towards the year's highs, invariably closes at or close to the all-time highs. So for me, that short-term short was really a more, I wouldn't say it's protection for the portfolio. I treated it as the chance that we could have a pretty good pullback, maybe another 200 points or so. But I'd also said, and I still believe that at worst so far, we're looking at a choppy sideways market with nominal new highs. This is not quite nominal. Today is. Yesterday was a big move to the upside. Don't want to deny that at all. So IWM, if it trades it next week by Tuesday, you see the IBM trading at 153.35, a little more than a point higher than where it is now. That is really good action, and we should see a leg C by maybe next week. And then a pullback, and maybe, I don't know, we get leg D right at the beginning of January, end of December. We'll see. So now let's go on, and we want to look at at gold. So gold had a very big move, and then it gave it back on, what's today, Friday, on Wednesday. It had an attempt at a new recovery high yesterday, which it managed to do. Then it closed with a doji right on the 9-period moving average. Then this morning it was looking great, and gold was up at the 1264 level. I said, if it starts to close above 1263, that's going to be very important. Well, it looked really good. It went to 1264. Now it's trading at 1257, and I'm convinced that gold is not yet ready. That's the reason why we didn't put on any gold trades. I would have loved to. The prices of some of these low cap golds are really very worthy of attention. But I think that gold needs to do some more retesting. We'll do the gold. We've got a caller. I want to go to our caller in a moment. We've got the dollar up. That's exactly why we've remained in our long dollar position from the exact low, 70-week low on the 8th of September. This is a peak C, and it's got a lot to go to break above 94.22. Crude oil, we'll do that quickly. Crude oil right now is at, I didn't even look at it, up 21. It's just stuck in a range. For me, this range is going to be very important right now. And we want to look at the TLT. And the interesting thing about the TLT, it's moved higher with the market. It needs to break above 128.23 to really improve the technicals in the daily, and the weekly technicals are improving as well. That's very interesting. I'm going to go to our first caller. We've got George in New York. George, how are you?
Basil, good afternoon. How are you today?
I'm well, and congratulations. You made some beautiful calls. You were on air, and you were discussing VRX, Valiant Pharmaceuticals, and it's had a very strong. It did pull back after that, and then you sent me a note, which I mentioned in the den here, that you had said they're getting rid of a lot of their. I'm not yet sure whether it was their prime or secondary or tertiary products or whatever they have to get rid of, to sell off to get cash. But the fact is, look at this, made a peak D with a doji high at 22.81 on the 13th, pulls back yesterday, and today it's sitting just on the 9-period moving average of 19.84. Weekly chart has gone to a leg C. Monthly chart still looks horrible but improving. Tell me, what's the story?
Well, so the introduction you gave is exactly what I've been doing with Valiant. And what I was looking for today was just to know in the future where you see possible weekly or monthly support areas where I could add. And okay. I also wanted, if you had time, to look at Teva Pharmaceuticals, if you had time today.
Certainly. Okay, let's do that. So Valiant Pharmaceuticals trading in 1984, up 15 cents. I would say to you, there has to be, at least over the next few weeks, there has to be something going on where the where the politicians start talking about prices and pharmaceuticals and the biotechs, etc. So my thinking here is, right with the move that you've had in Valiant, a spectacular move going from under 12, almost doubled. I mean, that is a brilliant move in a stock that was really being beaten down. I would say now there's going to be a focus on the stock, so that this is almost irrespective of what's going on politically. I think the stock has had its doomsday scenario. This is good right now. So I would say to you, can you hold on? I wanted to say that
yes, absolutely.
If it goes under 18, the 17 to 16 and a half areas where I'd look at it. But let's come back, because then we'll also do Teva Pharmaceuticals. Folks, the Dow's up 150, the S&P's up 23. Great action. Be right back with George in New York. Hold on.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back, and what we're looking at is really the Dow is just pushing higher and higher. So we're looking at Valiant Pharmaceutical, VRX, trading in 1982 at 14 cents. And George had a question. The question was, where would he add to it? I would be looking at the high that was made back in July, round about 1817 as a guide mark. Why? Because if it starts to close under 1817, let's call it 18, make it a nice round number. If it closes under 18, I would not be surprised if this very long wick candle that we've got this week, where it opened kind of at the, what was that, round about There are. It opened at about 1991, screamed up to over almost to 23, and then comes back down. Now it's at 1983. That candle says to me that it's a little bit overbought. The technicals are still really good in the weekly chart. It's just a little overbought. So this is what I'm going to say to you.
Yes.
I would have the next position split into two, because there's a chance that it doesn't get to the second one, but you'll know quite quickly. And the first area I would do as an add-on is right there at the high that was made. You can call it at 18 because it's such a critical level. If it takes out 18 on the downside, 1648 is a 200-period moving average. My eye says that given the chart formation, there's a real good chance that if next week it cannot break to a new high, in fact, next week if it cannot break above 22, but instead it takes out 19, that you're going to see at least a few weeks of consolidation. So my starting point would be the two positions. One is I would actually start the position just a fraction under 18, and then I'd wait to see how the $18 to 16, or actually it's 16 and a half, but let's call it 16, how that whole area holds up, because it just might be that you're looking at time. Now, what would say that it's completely breaking down? And that's the reason why I said think of it as two positions. Because the $18 one, if it happens by Monday or Tuesday, that's too soon, and we have to talk again about adding that second part of this one position that I'm talking about. I was just going to say, if it takes at least 4 days, 3, 4 by Thursday or Friday, it's kind of dipping down. It goes under 18. That's kind of the steadiness that I would like to see. I would like to see it not just give everything up right away, because then it says it's probably going down to the 16s very quickly. So you're going to add what?
I'll give you a little input quickly on Valiant. And just three important things. One, this year they got approval for a psoriasis drug. And in the psoriasis sector, it's a $10 billion industry.
That must be huge, right?
Their drug for that, so that's good. They're also planning 15 new product launches in 2019, and 3 to keep paying down the debt. In fact, they'll be ahead of schedule by the end of February.
Oh, this February. Very good.
Yes.
Okay, that's always good to know.
To lower in the debt. They still have debt, of course. And looking over the numbers, going out maybe, let's say, honestly, 3 to 5 years, let's say, you have about a $53 to a $56 stock.
Oh, okay. Very nice. Okay, now let's look at Teva. So Teva's made a cup formation. I love to go with where the mathematical halfway points are from the left side to the right side. The what I call the plumb line is the low, but in this case, it's taken too much time to get back to. It's just starting to fill that huge gap that occurred after the 3rd of October, where it was at 19, and the next thing you know, on the 4th, it's in the 16s. So it's starting to fill that gap. Now, what I'm looking at is there's a trend line that I drew from the gap, the major gap that went down to the low, the 2nd of November. It plummets to 10.85, and then it has an inside bar the next day, and that has been the low. And that was also what I call a volume climax spike. In other words, it makes a low at the same time as the volume makes. I must just double check that this is really a major. Yeah, so far from my eye, this has been that was a major volume spike to the downside. Let me just see how many million that is. So that was on the 1st of December, coming up right now. The 2nd of November, 117 million. I mean, that is huge. So now what it says to me is, based on the methodology that I developed, this is called a volume price climax. And what happens is, and I only get them to the downside. Once in a while, I've seen it to the upside. It says that for 28 bars, at least, you should not come even close to the low. That's the low just under 11. And if it holds very well in that 28 bar period, you can go for another 28 bars without even coming close to the low that was made. So I suspect, I'm not going to add it up right now, that we're at about 32 or 33. So this is doing very well. I like it. I think it's made a low that unless it takes out, it's at 18.37 up $1.06 today. Unless it takes out the 15s, which is the 9-period moving average and the weekly chart in the next 3 weeks, I think it's starting to establish something that says, hey, maybe it's in play for the first quarter of this coming year, but definitely a lot of work has been done, positive work in the chart formation. So where would I be looking at this? If, let's say I had a small position, in your case, you've got a position already, where would I add? It's at 18.38. This one is between 16.30 and maybe 15.50. That's where I would start to think of adding.
Great. Okay. The only risk here, there's several risks. They have a lot of debt, of course, because with the acquisition of Allergan's generic company. But here's the other risk that where we're going to get a lot of volatility in the stock going forward. And I think that is because Allergan has 9.2% of Teva stock they took when they sold the generic division of Allergan. So with that said, we got to watch because they don't want to keep Teva stock, they said.
So they're going to try to get rid of it. Okay. Yeah. Actually, it makes sense for them to sell it.
Just caveat emptor.
Okay. All right. That's good to know.
Stock, you know?
George, great to speak with you. It's always enlightening.
Basil,
people in the den are saying
thank you for all your help you do for me and everybody else. Happy holidays to you and to the Tigers and Tigresses. And kudos to Tom, the way he runs this format here for the private investors. It's wonderful.
I concur, and
thank
you very much, George. We all appreciate it. Happy holidays. Thank you for calling.
All the best. Happy holidays.
All the best to you. Thank you. So, folks, that's Teva and Valiant that we were looking at, TEVA and VRX. Very good. Thank you, George. So now what I want to look at, I had a question. This is a purely technical question. Let me go to this chart right here. This is what we were using on Friday. We were looking at all the different charts. So this is Reliance Steel and Aluminum. We happen to have a position in it. We've added to that. So the question was, is this not a D that we were looking at right here? So based on TradeStation platform, the question was, what about that 74.72 high on the 16th of November? Well, it's funny. I actually spent time on this very chart discussing it and another chart that was very similar, because you can only get a peak after you've made the trough and you've started to get higher highs in the leg. I'll talk about that. We'll magnify this and have a look at it, because quite a few people over the years have done the same thing. So I'm not sure if this is the same aspect. We'll talk about it.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, so let's just go through this. The low that was made in Reliance Steel right here on the 15th of November had a high of 74.94. The next day was a tiny little candle, an inside day, lower high, lower high and higher low, tiny little candle, and that had a high of 74.72. But the next day didn't have a higher high of 74.73. It had a higher 74.66. Hey, wait a minute. Yes. So the question was this not A? No. This is the start right here of a new leg A. Let me put that in right here. Click, click, click. That starts A because it was, doesn't look like it. Am I reading that correctly? 74.72. No. I'm right. This is 72.66. There's no A there. That broke above that high, not that high, but that high, 74.66. The minute it goes to 74.67, now you start what I call gray leg A. I've got a small A. The next bar makes a higher high. That's an A. The next bar makes a higher high. That's a gray A. But the following bar, the bar of the 24th of November, 76.80 is below the 76.99 high of the 22nd of November. That becomes your first A. Then this is all called gray A, gray A, gray A. Boom. The moment it goes 1 penny above peak A, 76.99 goes to 77.00. You've started gray leg B. Gray leg B, gray leg B, gray leg B. Boom. You make a B. Hope that's clear. So unless you had a higher high on this bar right here, you can start your A. This is the real peak A is there. So the question was, aren't we at a D? This could even be a C1, C2. That might turn out to be the case. So far, the MACD is good. The stochastic is holding at 85%. This is good action, holding the 9-period moving average, holding this little 7 moving EMA, the light green one. The hint that you might be getting a little tired is this dashed line right there. But so far, this looks good. That is a peak C. I suspect we should get a leg D above 84.41. Okay. Now, the next thing I was asked about was, could I look at, okay, CSX. Let's just run these real quickly. We've got a few minutes here, and I've got a bunch of questions. So CSX is the rail line. I think Buffett has a chunk of it. CSX trading at, so CSX goes to a high of 58.25 on the 4th. So you need 58.26 for a leg D. On the 13th, it goes to 58.35. Next day is 32. So you made your leg D. You made your peak D. Now it's ready. Remember, at peak D, Other things can happen. There's your PT, kaplop, down 4.36 today, 52.95, down 7.61%. Right there, the 200 period exponential moving average, and leg D, still only a leg D in the weekly chart. So D, peak in the daily, leg D in the weekly, and leg D in the monthly. Isn't that interesting? Got to watch the transports. Now, let me tell you about UPS, United Postal Service. I know packages that were supposed to be sent Prime, two of them sent Monday, supposed to arrive Wednesday. One package arrived Wednesday. The other package hasn't arrived, and it's not only delayed, but they send me notices to say maybe you'd have to reorder it and then send back the other ones. And it's not good. Look at UPS stock. I think it's going to come in. What it must be costing them to just get people out there to do the work, and it's not being done correctly. This is going to be something we're going to watch the stock come the last week of December, first week of January. UPS trading up $1.38, 118.22 off the major high of 125.16. Let's go to the next question. Is Greg wants to know about TDD. Now I keep my eye on TDD, although we haven't done anything. One of the reasons the Trade Desk Inc. A shares self-service platform for digital ad campaigns. Oh, that's right. So this is like, I think it must be something like that Tube Mogul, some of these programs that try to help clients do the advertising themselves. So this has made a peak D in the monthly. Kaboom, an IPO back in 2016 goes from the 20s to the 65, 66 area, comes all the way down to the 43s, and now it's trading at 49. So the question is, Greg wants to know, morning Basil, would you look at Trade Desk? I bought a small position at 49.33. Good, okay. When it made a leg B in the daily, I would like to add on a pullback. What do you think? Thanks, Greg. Greg, this has had a very difficult time. And I'm looking at this and I'm saying, I'm not sure that I'd get too carried away. But what I would say to you is, this is a leg B right at the 200 period moving average. You might miss the move into the 50 area, and then it's going to be difficult to do. But I'm going to say to you, because of the weekly chart, don't get too carried away. You could have picked the perfect spot again for this to have another move to the upside. My eye says that there's more work to be done. Even if it moves higher now, I think it's going to come back and test the gap, and the gap is just under 46.79. So this is what I'm going to say to you. Have a little patience. If you want, you could start another position right now in leg B, 49.65, before it makes a peak B, and then it goes to a C and maybe a D. The only thing that I would say is, if you do something now, I would have no more than under 49, I'm done. Actually, under 49.25, I'm out of this trade. It needs to be working its way higher right now. The 120-minute chart says, 48.79. I don't even want to give that 48.79. What leg is this? Leg. So this is A, B, C, D, goes into the rectangle cup formation. A, B. So this is either F or B. Yes, nothing's changed. I'm going to say I wouldn't get carried away. If you want to start another small position here, you have to have a stop. But unfortunately, 9-period moving average in the 120s at 48.78. That's almost $1. I would not want to risk $1 right now. I'd either have patience to see how it holds. Going into, you need a down day, so let's say it's Monday, if it does that. And then Tuesday is where you start to look again. Have a little patience, unless you want to put another ad on right now, because if it breaks into the 40, if it goes to 50.25, it's going to be tough to buy. Because the next thing is the high of the, right there, the high of the 22nd at 52.31 suddenly starts to beckon as a magnet. So yeah, maybe start a little position now. It's not even it's a smallish position. Reason being, I want to see what happens over the next 2 days, because if it does pull back, not goes up, if it pulls back, I want to know where it holds the support. 48.05 is the 9-period moving average. I don't want to hang around for $1.50. I'd have a 20, 30 cent stop. You can always get back in. Next question, radio show, Robert. Morning, Basil. I went long the IWM this morning at 151.10. Whoa, okay. IWM at 151.10. It's trading at 152.55. Very good. Doesn't the IWM still need leg or peak D? If it's doing an ABC up, then it looks to me like it could go to 160. What is your assessment? Thanks for the help. Rob, I think you entered it just perfectly. Why? You've got a really nice cushion in the 151.40s, and if it's going to move, it's going to go A, B. It'll start leg C in the daily. This is great. I'll talk about it when we get back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Yep, another great hour coming up. And stay tuned for Steve Rhodes. You've got Steve Rhodes, Dave White, Tom O'Brien. And just before I forget, Monday night, for those of you in the Boston area, I'd love to see you. We've got so many Tigers in the area, and so many often come to the meetups. I've spoken very often at the Boston Investors Group meetup. It's at MIT on Cambridge side, building E51. Room 335, 70 Memorial Drive, Cambridge. It's really on the corner parallel to Memorial Drive. It's quite easy to get to unless they're doing traffic stuff. So it's a holiday celebration meeting for the Boston Investors Group and Boston IBD. It's just a holiday meetup, 6:30 to 7:30. If you want to bring something, it's a potluck reception. Don't have to, but it'll be nice if you want to. And we're going to be talking about potential investment opportunities, areas for 2018. Basil Chapman is a guest speaker. And there'll be sandwiches, veggies, munchies, desserts, drinks, cups, plates, ice, whatever. If you want to bring, say that's great, but they'll be there. And just check that page, and you'll find out even more information. So now let's go to the nitty-gritties here before we run out of time. So we got to the question of. So real quickly, the IYR, I want to do this. So this is the IYR. Let me see where we are. I haven't updated it lately. IYR moving nicely. Leg B. So to the IWM, I think that was a great entry point. If there is going to be a leg D, and there really should be a leg D, I don't know when, then you're incorrectly. All I'm going to say, let me just go this. IYR has a little bit of the same pattern because it's rallying nicely in leg C right now. The IYR at 82.42 up 30. It's going to have a lot of resistance at 82.50s. Let's see it handles that. Let's just go back to the IWM. IWM, it'll make that leg C 1 penny above leg B, peak B, and that is at, and this is all great because the previous peak C needs a whole bunch of up moves. So 152.71, 152.72 starts leg C. Then it should go to an overlapping wave in leg D if it's going to do that. You want to see by Tuesday of next week, 163.50s. Wow, Sarah, good to get to you. A couple of other questions. Julie, I did. Oh, VIX index. Don't worry about the VIX. We'll talk about that on Monday. Have a great day, folks, and have a wonderful weekend. Check out my opening call, and I will see you again right here Monday. Have a
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.